Okay, we got some important economic data on Friday, and the market initially had some volatility surrounding the jobs report, but then ended up rallying and then went right into resistance on the S&P 500, the upper boundary of the rising wedge. I talked about that on Thursday, that possibility happening if the pattern was expanding. It did, and we got rejection there, and it turned down right as the inflation data was being released. The market sold off on that, the inflation data coming out of the survey. Now, here's what happened. We had a little volatility surrounding the release of the jobs report with futures, but eventually the market started going higher. We went right up into this trend line. I talked about this trend line again, told you we could be expanding it. On the 60-minute chart, we had a bottoming tail down here. I told you we could be expanding it here. I've included that low. But I told you we could still go back up and hit that upper boundary and then turn. That's exactly what happened. With the jobs report, we went right up into that trend line, better defined and expanded the rising wedge. Talked about that possibility in Thursday's video on the 60-minute chart. Here on the 5-minute chart, you can see it. We slammed right into it, and then the inflation concerns. We got a significant drop in consumer sentiment, concerns about the tariffs. We saw the inflation one-year expectations increased by 1% with the University of Michigan survey. And President Trump announced that he will be announcing more tariffs next week. And so we had this big inflation freakout. Beautiful rally right into the trend line. I talked about this. I talked about it right here on this chart with the 60-minute chart. I told you we could be back testing, or you could be trying to go back to that upper boundary. And I told you that if that happens, and here it did on the 60-minute chart, I told you if that happens, then the sell-off here, rather than breaking down, was just expanding the lower boundary of the rising wedge. We went up, we slammed up into that trend line, as you saw on the 5-minute chart, here on the 60-minute chart, and then we broke down surrounding the concerns about inflation. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you like the information, you like the charts, let me know that by supporting the channel. If you could take a moment to do that and partner with me, I would really appreciate it. A lot of time and effort goes into doing this. If you could just take a moment and step up to the plate and help out, I would really appreciate that. I thank you for your consideration for that. Just follow the link below. It will take you to a secured site. You can donate any amount you want or make it a recurring donation. I thank you for your consideration for that. Now, I've been talking about about to have an inflation freakout. We're seeing a preview of coming attractions right now. Again, I told you I think we're going to test this low. We're getting the rising wedge. Divergence is playing out. On the 15-minute chart, we talked about the rising wedge in great length and detail on Thursday. You need to watch the video all the way through so you understand what's about to happen with the inflation freakout that we're about to get. Once this volatility is down, we're going to go and make new highs in all likelihood, in my opinion, and you're going to get the inflation freakout because Wall Street believes the tariffs are inflationary. They're not. If you watch the video all the way through, you will be convinced that they are not inflationary. I will prove it to you. And you'll have information nobody else has. I'll prove to you why it's a bunch of poppycock. I challenge you to watch this all the way through and prove me wrong. I will show you compelling evidence. Tariffs do not cause inflation. That's what the market's selling off on right now. Understand, we're going to get an inflation freakout. This is a preview of coming attractions. It's going to get more intense as we go higher. It's going to usher in the bear market. But the market top on two lies that the Fed is not going to cut in 2025. So because the market believes that the cuts are going to take the market higher, and go, inflation's ticking back up, the Fed can't cut. And then the second lie is that market's going to peak out on is inflation soaring. So the Fed can't cut, inflation soaring. The tariffs, we're all going to die. That's what the market sold off on today. Watch this video all the way through so you understand what is about to happen. Why the market's about to top on a bunch of lies. The narrative is, inflation's going higher, so the Fed can't cut. That didn't happen in 2007. The Fed told us there was going to be no recession. They were so concerned about inflation, and the recession hit in December of 2007. By January, The Fed was doing emergency rate cuts and inflation soared even higher as the Fed continued to do slash rates. We had a deflationary bust, and eventually the deflation dealt with eventually the recession dealt with the inflation. I see the same thing here. Media is trying their best to convince us that we're about to have a trade war and it's going to create this massive inflation. We had the recession indicators already flashing before the election ever happened. Trump ever got in office here and started talking about the tariffs. The recession indicators have already flashed. We're going to have a recession. Trump's going to inherit a recession. The reason why we haven't had it yet is because 2024, right before the election, we artificially propped up the economy with $2.2 trillion in deficit spending. That is what causes inflation, along with increase in the M2 money supply. Who influences that? Oh, gee, the Fed. The Fed and the government have given us the inflation, not tariffs. I don't like tariffs. I'm not a fan of Trump's tariffs, but they certainly don't cause inflation. And if you watch this video all the way through, you'll see compelling evidence that will prove it to you beyond a shadow of a doubt. Friedman also said tariffs are a tax. He is absolutely correct. A tax that the consumer pays. A tax that's generally hidden in the price of goods. Absolutely correct. Tariffs they act like a tax. They don't cause inflation, but we're going to all this volatility because Wall Street believes that. The Fed believes that. And the media is doing everything in their power to try to convince us we're about to have a trade war and this massive amount of inflation. Inflation's going to go up, but it's not going to go up because of tariffs. It's going to go up because we've just had massive deficit spending. There's lots of economists that believe that tariffs cause inflation. But there's still a lot of economists out there that have their heads screwed on straight that will tell you that it's a bunch of nonsense. I'm telling you this, that the inflation is not going to come from the tariffs. It's going to come from the increase in the money supply and from the deficit spending that we've just had. Fed policies, government deficit spending, this all lead to inflation. But then you have economists out there telling the truth, like Dr. Bill Connerly's recent article in November of 2024 in Forbes magazine. He's one of many that points out that the myth that tariffs cause inflation. They don't. There's lots of other economists that will tell you the exact same thing. Any economist worth his salt will tell you that, and that is the truth. Over at the Fed, I mean, they believe a lot of nonsense, and they're married to Keynesian economics in many cases. Again, President Trump's tariffs have caused great confusion regarding high prices and high inflation. They are not the same thing. High prices and high inflation are not the same thing. He is correct. The effect of tariffs is to push prices up, but not to sustain higher inflation. I wrote that Dr. Connerly's November Forbes article is absolutely correct. He's distinguishing between a one-time price increase due to tariffs, one-time price increase, and sustained inflation. He argues that tariffs cause a shift in consumer prices just once. But this does not equate into ongoing inflation unless monetary and fiscal policies continue to push inflation upward. In other words, an increase in the money supply and government deficit spending. So tariffs do not equate into ongoing inflation. Our new Treasury Secretary, Scott Bessent, saying the exact same thing. The tariffs don't cause inflation. He's absolutely correct. Recently at his confirmation hearings, he argued against the notion that tariffs cause inflation. And he pointed out that tariffs can't be inflationary. Tariffs can't be inflationary because if the price of one thing goes up, unless you give people more money, then they have less money to spend on some other thing. So there's no inflation. In other words, the tariffs act like a tax. And if something costs you more, then you have less money to spend on something else. Recently posted this on social media, writing about the new Treasury Secretary, and pointed out that Scott Bessent is basically pointing out that there's an increase in prices due to tariffs. It would be offset by reduced spending elsewhere, maintaining a neutral impact on overall inflation. That's what he's saying right there in his recent comments about the tariffs. We had the tariffs in 2018 and 19. The tariffs came in. It didn't cause inflation. Inflation went down. The CPI, when inflation first began, all the inflation tick up a little bit, down. It hovered near 2%. It ticked up a little bit, and then it ticked down. It didn't impact inflation with the CPI. And when the tariffs finally ended in 2019, it didn't end with China. When it ended with Canada and Mexico, again, inflation was lower than when it began. I mean, this myth that, it's going to make this inflation spike, and it didn't. So where does the inflation come from? I go on. Inflation primarily comes from an increase in the money supply and the government deficit spending, not from tariffs. Just trying to point out that an increase in prices due to tariffs is offset by reduced spending elsewhere. Cancel each other out. Tariffs do not cause inflation, but the market believes that, and it's going to be freaking out here very, very soon. Right now, a preview of coming attractions, and when we get our next rally to new highs, we're probably going to see a major top, and this is likely going to be one of the issues of an inflation freakout. This will be part of it. You had the Fordney and McCumber Act of 1922 that gave us 40% tariffs on imports. We had deflation, 6% deflation in 2022. Did that create massive inflation after those tariffs of 40% were put into place? We had 1.8% in 2023, 0.4% in 2024, 2.3% in 2025. We never got above 2%, 2.3%. That was it. It dropped to 1.1% after that. We got deflation and a mild recession in 2027 after that. 40% tariff on imports. Where is the stinking inflation on 40% tariffs in the 1920s? It didn't happen. The media is lying to us. The tariffs do not create inflation. If we had 40% tariffs in 1922, why didn't it create a bunch of inflation? We didn't get a recession until 1927. Why? It never rose above 2.3% in the 1920s. These people running around with their hair on fire telling us it's, the inflation boogeyman is going to come out if we get tariffs, and it's a bunch of poppycock. Now, the tariffs of 1922 many of them were replaced with a new tariff act called the Smoot-Hawley Act of 1930. So we had tariffs in the 1930s as well, the greatest deflationary period in history. Massive tariffs in the 20s, massive tariffs in the 30s. Where's all the inflation? We had a deflationary period. Finally got some inflation in 1934 to 3%, back down to 2% there in 35, back down to 1% in 36, the highest. But unfortunately for those that are going to say, aha, we got inflation to 3.6, well, by 1930 tariffs were greatly reduced. A new act was passed greatly reducing the tariffs. Where's all the inflation? So the highest it got was 3.1% in 1934 with the tariffs of 1930, and it was greatly reduced in 1934, the year that we reached 3.1%. We didn't have all this massive inflation. When they started in 1930, we had the greatest deflationary period in history. A total myth that the tariffs cause inflation. We didn't see it in 2018 and 19. We didn't see it in the 1930s, the greatest deflationary period in history. We didn't see it in the 1920s. And with all these tariffs, 40% tariffs, we didn't see the inflation. Where is it? Media is going to be out there trying to convince us that we have that the tariffs cause inflation. And all you have to do is look at history to see that they clearly don't. Inflation is caused by an increase in the money supply and excessive government deficit spending in a nutshell. That's what causes inflation. Checkmate. There was a lot of volatility surrounding concerns about the tariffs in 2018. We had a major sell-off in the first quarter and then later in the second half of the year. And again, tariffs were a part of that. Half the year we dropped 20%. There's a lot of volatility. When President Trump put the tariffs in place in March of 2018, the inflation rate for the CPI was at 2.4%. It rose for 3 months to 2.5, 2.8, and then 2.9. It rose for 3 months after that into June. Then it flattened out, and then it went down from there. After peaking at 2.9% 3 months after the tariffs started, and we only got to 2.9%, it started dropping after that. By the end of 2018, by December of 2018, we've dropped below 2%. Held steady below 2% or at 2% by April. By the time the tariffs ended in May of 2019, the inflation rate for the CPI was at 1.8%, lower than when we started the tariffs at 2.4%. If the tariffs were going to create all this inflation, and we kept the Chinese tariffs on, and the Biden administration added to the tariffs, never saw the inflation until they decided to pass out $5 trillion in checks and shut the economy down. And the Fed gave us QE 2.0. That's what gave us the inflation, shutting down the economy and all the supply chain disruptions, not the tariffs. We didn't have the inflation with the tariffs. We didn't have it in the 1920s or 30s, or you didn't have it in 2018 and 19. Where's all the inflation that we're being told that the tariffs are going to create? I see no inflation. We hovered 2%. The highest we ever got was 2.9 a couple months later, and it went down from there all the way down to 1.8%. By the time the tariffs were removed, the trade agreement was being implemented between Canada, Mexico, and the United States. These people telling us that the tariffs are going to create inflation are full of baloney. They really are. I just showed you several times in history where we had big tariffs and there was no inflation associated with it. You have this myth about tariffs. Again, I don't like Trump's tariffs. I'm not a fan of tariffs because they act like a tax. I understand he's using it as a leverage chip here, bargaining chip, but it's absurd to say that the tariffs cause inflation. And economists will tell you that. It's these experts on the financial channels and the folks over at the Fed that believe all this stuff. And there's a lot of economists that believe this stuff, but it's simply not true. How could you put inflation or tariffs in place and have inflation go down? Because that's what happened with the tariffs of 2018. Inflation went down, not up. Now, inflation concerns two things. The president was talking about trade and the tariffs today during the market session, and then also we had the release of a survey with inflation data on it, and I'll show you that in a moment. Additionally, consumer sentiment came in, and we did get the revisions with the jobs report. The market initially had some volatility surrounding that and then kind of shrugged that off. It came in weaker than expected. I'll be talking about all of these things. The market concerned about possible more tariffs. I talked about this before, and again, talked about the UK. He's talked about the European Union. And there's a lot of volatility in 2018 when all of this happened previously surrounding the tariffs uncertainty. And it was, the Japanese prime minister was visiting, and during a news conference with him, Trump made some comments that did rattle the market a little bit. He said that he would be announcing his trading plan next week for more favorable terms. He said so that we're treated evenly with other countries. So he's planning more tariffs on other trading partners, and the market had a negative reaction to that. I told you again, this business of tariffs is going to end up rattling the stock market. And again, this is a preview of coming attractions. Once we get the next leg up, we're going to get this next leg up, and then it's really going to get ugly after that, after we go and finish the blow off top. Now, he said there could be tariffs with Japan, but he is saying that he's going to announce more tariffs on different countries next week. So again, could further rattle the stock market. We're also going to get the inflation data next week. We're going to get the PPI and the CPI inflation data next week. Something else could put in a floor, and that is that Trump administration is supposed to unveil its plan for the middle class tax cuts next week. We had a preview of that earlier this week with the White House press secretary talking a little bit about it briefly, but it's supposed to be unveiled this week as well, along with possibly the announcement of new tariffs. Now, you have to understand, Wall Street, we got the election rally and the rally surrounding inauguration day there just ahead of it. We broke out the day before inauguration day of our bull flag. You have to understand, Wall Street loves Trump's economic policies, but they absolutely hate his tariffs because they believe that they're inflationary. Now, let's just talk about the concerns about inflation. Consumer inflation fears spike in February as tariff worries hit sentiment. Again, consumer sentiment declined sharply, hitting a 7-month low, but we also had a spike in the expectations for inflation going forward. The University of Michigan's consumer survey showed that respondents expect inflation a year from now to be at 4.3, jumping a whole percentage point from the previous month's reading, and it's the highest since 2023. So that is a great concern. So that with that inflation, and then the president talking about potential new tariffs being announced next week on other countries, the market sold off sharply, going up, slamming up right into the trend line on the S&P of the upper boundary of the rising wedge and turning down off of it sharply. All concerns about the tariff sheriff. Concerns about inflation with the tariffs. On top of that, again, we got the lower reading with the consumer sentiment reading coming in lower than expected. But consumer inflation expectations, based on this survey, surged to a new recent high on tariff fears, and jumping from 3.3 to 4.3 whole percentage point. Caused bond yields to jump. We saw the 10-year Treasury note yield jump. We have concerns about expectations for inflation rising surrounding the tariffs. And make sure you watch the video all the way through. I have important things to share with you about next week. First, the inflation. Again, President Trump rattled the markets, saying he's going to unveil possible new tariffs next week. He didn't name which countries, but again, that's got the market concerned. And then we have consumer sentiment coming in, and that is plunging on concerns about inflation because of the tariffs. It came in, it was supposed to come in at 71.3, it came in at 67.8, and again, that was lower than the previous reading of 71.1. We have in that report the expectations for inflation. Now, we saw the University of Michigan's Consumer Sentiment Index fall for the second straight month in a row, and it dropped to the lowest level since July of 2024. Again, this is another indicator that is predicting that we're going to get a recession. It's diverging, by the way, with the stock market. In red here, I have the S&P 500. Here is the Consumer Sentiment Index. at these major tops, you get these divergences, and that's what you usually have happen is you get these divergences. Consumer sentiment makes a lower high and the S&P makes a higher high, and that usually happens right before the recession. Market's in a topping process, which I believe it's in right now, and you have that over here with the bursting of the tech bubble. Consumer sentiment peaked first and diverged, and then the S&P shortly thereafter closing on a closing basis for the S&P. Actually made a lower high on the S&P in 2000, August, lower than the March peak, but again, on a closing basis, slightly higher. So that's what I'm using right here. And then we had the same thing happen here in 2007. Again, we saw divergence, and then we saw the plunge in consumer sentiment. We saw the plunge in consumer sentiment. S&P topped, and it then also plunged and moved into the bear market. So again, we're likely moving towards the recession happening. Again, usually the divergence happens right before the recession. The divergence happens here right before the recession. Just a little bit divergence develops, and it may not be done. As a divergence develops, the topping process comes to a conclusion with the S&P 500. A great recessionary. With the survey, the University of Michigan's one-year inflation expectations jumped a full percentage point from the previous reading. The previous month it was at 3.3. It's now at 4.3. And again, fears that the tariffs are going to create massive amounts of inflation. We rose to the largest increase of expectations of inflation for the next year. 1 year inflation expectations. This is the highest it's been since November of 2023. So you have inflation expectations soaring, and you have consumer sentiment sharply dropping. And the president comes out and announces, hey, we're going to talk about new tariffs next week. And the market said, oh boy, that's it, too much. And the market sold off, completely reversing the rally that we initially had shortly after the market opened with the release of the jobs report. And later on in the session, just a little bit later, we had that release of this inflation data and the consumer sentiment out of the University of Michigan. That's what rattled the stock market today, on Friday, ahead of the Super Bowl. Now, with the president's comments about possibly more tariffs on the horizon here, and the inflation survey jumping by 1% on inflation expectations and consumer sentiment dropping on concerns about inflation, we saw a jump. We had a jump on the 10-year of just over 1%. We had dropped below the 50-period moving average. We had started to try to bounce off of it. Then we dropped back below it. And then now we're trying to bounce off of it again. Next week, we have Powell testifying before Congress and the inflation data. So again, I think we're going to get a bigger pullback. I think we're going to go higher on hopes of tax cuts and new bull market and all the rest of it. But again, as I've talked about, we could see a rise here for a counter trend for a lower high, or this could even eventually come back up here and get a double top. But if we try to rise a little bit, or a larger retracement and end up getting a lower high, or just bounce a little bit, I think we're going to pull back further. But then I think that again we're going to get one final climax rally to complete the blow off top in the market. And I think that we're going back to test this low. Again, our 100 period, our trend line's right there. I'll be watching. Do we get a slightly lower low or a higher low? But I do think, again, the January low, and we could see something bigger. We could see the CPI gap filled from back over here. That's possible, but the trend line is right in that same area. So we'll be watching this area very closely going into next week. And we're going to have Powell speaking, testifying before Congress. Oftentimes, Powell, one day is down and the other day of testimony is up. It could be further volatility with Powell's first day and maybe try to carve out some kind of bottom with his second day of testimony. We'll be watching that. But I think that we've got the 1 and 2 going on here. I think we're going to get 3. I think we're eventually going to this upper channel. And then everybody will calm down, and it's going to be the kind of complacency that we saw here at this rally surrounding Inauguration Day. complacent. And if we go higher up into this level, people are just going to go bananas. You start to sell off and get a 20% drop, as history has shown in the past. These market tops, they tend to usher in the bear market with a 20% drop. You did in 2000, going into 2001 there, and you did in 2007, going into 2008. Going to get your inflation freakout up here. I think it's going to be surrounding the tariffs. I think it's going to be with the inflation data, the inflation reports like CPI ticking back up, and we're going to get them next week. We'll see if we get a sigh of relief with that, or if they start ticking back up, or maybe later. But it's going to have, and you got the media right now doing everything they possibly can to whip everybody up into a frenzy that the tariffs are going to create this massive trade war, which so far, that hasn't happened. We saw Colombia cave, and again, Trump's using them as a bargaining tool. Colombia caved, and then we saw Mexico cave, and then we saw Canada cave. We don't have a trade war. The media is doing everything in their power to tell us that we're going, and now they're telling us, oh, we're going to have tariffs, and there's going to be inflation, and we're going to get hyperinflation, and we're all going to die. That's what they're promoting with this stuff. And again, it's not true. Now, the Fed officials are raising concerns about the impacts of Trump's tariffs on inflation. They're all concerned. And if you listen to these Fed speakers, economists over at the Fed, they're all concerned. Oh, we're going to have inflation. Tariffs are going to cause inflation. That's what the Fed is telling us. Powell is so hawkish right now. It's not the Fed. Inflation is going to go up right now, but it's not going to be the tariffs that do it. Give the illusion it's the tariffs, and the market's going to have an inflation freakout. I know that inflation is going to rise because the M2 money supply is rising on a year-over-year basis, nearly 4%, and the CPI is going to likely follow that. Not too distant future. CPI in January came in at 2.9%, up from 2.7%, and higher than our recent bottom at 2.4%. The CPI has likely bottomed, and it's rising, and we're going to see inflation come back up. It's not going to come back up here as the media is trying to get us to believe now, but we are going to see an uptick in inflation. And Wall Street believes, hey, the Fed is not going to lower rates because inflation is here, turning, and the Fed's not going to be able to cut. And that's why the amount of cuts, the Fed downsized because from 4 cuts down to 2 for 2025 there. And we got a hawkish cut out of the Fed there in December and a pause in January. They still have 2 cuts penciled in, but and we'll hear what Jerome Powell says next week as he testifies before Congress. The narrative is, again, inflation's going back up, and the Fed's not going to be cutting. And again, with Fed fund futures, the betting market, we've seen it go down to none, to 1, maybe 2. The odds aren't very good for it. The market believes that we're going to have all this inflation. The Fed's not going to be able to cut. The Fed believes that inflation is going to resurface, just as they believed right before the recession in 2007. Most people weren't around with the previous 2 bear markets and the recessions associated with them, the bursting of the tech bubble and the financial crisis. So again, people don't remember that. I do. I was there. You're going to see inflation turn higher. I'm telling you, it's going to go higher. But it's not going to be because of tariffs. The illusion is going to be created, it's because of the tariffs. Tariffs don't cause inflation. I don't like tariffs. I'm no fan of tariffs. But I'm not going to sit here and lie to you and tell you they cause inflation because I don't like them. Because, to lie to you and tell you, they cause inflation. I don't like them when they don't cause inflation. I'm no fan of Trump's tariffs. I don't like them. But I understand he's using it as a bargaining chip. There's going to be this inflation scare. We have the CPI inflation data coming in at 2.9% with the headline number. Now, this is the M2 money supply. It is rising on a year-over-year basis. It rose to 3.9%, just under 4% right here. Right now, the CPI is currently at 2.9%, lower than that. the CPI is likely going to follow suit. I know inflation is about to rise, likely bottomed. The CPI is likely bottomed at 2.4%, and it's now at 2.9%. It's likely to continue rising. Get an inflation freakout. It'll be blamed on the tariffs, and the tariffs have nothing to do with it. It's the money supply, which the Fed has great influence over the money supply. The increase in the money supply and government deficit spending, which we just had $2 trillion, I believe it was $2.2 trillion, 2024, over nearly $7.5 trillion in 1 year. It's never been done before. Causes inflation is an increase in the money supply, nutshell, government deficit spending. That's what causes inflation, not tariffs. But everybody, and the media is going to do their best to convince us all that tariffs are going to cause all this inflation, trying to whip everybody into a frenzy, and they're probably going to be successful. And I think that we're going to rise higher on the S&P, and then we're going to get an inflation freak out.